Investors, I am sounding the alarm bell on 3 dividend stocks that are all trading at or below their 52-week lows, which means if you're looking for dividend stocks, your search is over. Buy these dividend juggernauts and just call it a day. With that, are you ready? Now, from week to week, rather recently, the stock market has seen some high highs before actually being pummeled back down from either doses of macroeconomic news out of the Federal Reserve or election news, to the larger institutional investors simply spooking us all out of the average Joe positions when it comes to tech as they sell off. But either way, you, if you're a true investor, shouldn't be moved, troubled, or dissuaded whatsoever. And a matter of fact, if you just follow what I like to call my Buffett-proofed criteria from companies with reputable brand names, strong leadership teams, and most importantly, clean balance sheets, you should be shopping the market all day long to enjoy any and all deals that are presenting themselves right now. And as we speak, there are 3 dividend stocks that not only pass the Buffett-proof criteria test, but currently are hovering around their 52-week lows, meaning they are all hot deals and ripe for your investment. Heck, even insiders and hedge funds at all of these companies have been loading up as of last quarter. But let's go ahead now and just kick it off with the riskiest of the bunch, yet all context considered, one heck of an industry leader. Nike, ticker symbol NKE, which is arguably the world's largest, most dominant athletic footwear and clothing company that is truly, well, at least right now, given our economic environment as a luxury brand, hurting. And if we take a look at consumer trends as consumers are shifting and scaling back on spending, well, Nike's bottom line is simply impacted. Reported revenue as of late has declined by 2% to $12.6 billion, and also provided weaker guidance from their executive team, all gave way to the share price declining on the year by over 32%, more recently falling from $94 to $74 per share, which is in fact cheaper now than their shoes. However, zoom out with me to see over 107% worth of share price appreciation over the last decade, all while analysts right now remain bullish, forecasting over 26% worth of upside, which should result in a share price jumping up to $94.40 per share. But it is a huge positive indicator here to see the amount of hedge fund activity. Last quarter, we had over 6.4 million shares purchased by smart money, begging the question, if smart money can just do it, why can't all of us? And until any sort of rebound, well, Nike is going to be here with a solid dividend coming in at a current yield of 1.98%. That has been growing over the last 40 years without interruption by 15% year over year for the last 20 years. Now, investors, before we cover some safer bets with these next 2 dividend picks, I just want to come right out and share with you some rather dismal stats. As I looked into my YouTube analytics, I noticed that 71.2% of all of you watching are hopefully enjoying, but literally not even subscribed to the channel. So I want to go ahead and call on you right now to take some massive action and subscribe to actually help me reach my goal of getting that number down to 50%. And with that, of course, comes my strong commitment and my word that I will double down on producing more content just like this. That means you're going to get more stock ideas every single week, macro insights, and even better masters of the market guests. A win-win for all of us. Now, while you're at it, key me into where exactly you stand on this particular video. If you're getting value from it, tap on that thumbs up button. That will let me know that you want more content just like this. With that, we're going to go ahead and get back to it, but this time with Pepsi, ticker symbol PEP, which I know I've been talking a whole lot about lately, but that is because this sale is just way too hard to ignore, and with hedge funds going all in, scoring close to over 150,000 shares worth of Pepsi last quarter, I'd say it is just time to consider following suit. Now, the reason being, well, Pepsi is of course a beverage behemoth, also doubling as a salty snack king that grants all of us favorable product diversification, but as the company's sales is actually declining and just coming in weaker and weaker as expected, thanks to the very same consumer trend shifts impacting Nike's bottom line, I'd say this is a grab for all of us right now as the stock slid from over $180 per share back when to $167 per share recently. And while it does remain up overall in the year nominally, this is where it gets quite impressive. Click to the 10-year to see almost 150% worth of share price appreciation. Now, Pepsi's very own insiders actually decided to double down on their share buyback program. That executive team there is helping all of us out in making the value of the stock higher, while analysts have remained pretty upbeat here on Pepsi, forecasting a share price to rise to $187.11 per per share. That's a nice bump up by about 11.6% from here. And until then, a very refreshing 3.24% dividend yield. That's been on a streak now for the last 59 years, all while growing by an average of 11% year over year. However, if you are in fact looking for some real dividend reliability, look no further than the one, the only, the dinosaur of all the dividend stocks out there, Johnson & Johnson, ticker symbol J&J, which is of course a leader in the medical technology as well as pharmaceutical space that has been facing some serious competition from, say, Gilead Sciences, while it has forever just been battling a lot of lawsuits when it comes to talc. But on the flip side, continuously it's been delivering on revenue and expectations for growth in the medtech space. But overall here, I want you to take a look. J&J, as of this recording, is down from earlier on in the year and just $1 away from its 52-week low at $153 per share. Yet zoom out to rediscover your J&J faith as we see almost 100% worth of share price appreciation, along with analysts who have just been beating the drum and predicting over 13% worth of upside to come from Johnson & Johnson. That would give way to the share price hitting $174.33 per share. And once again, we see a lot of smart money moves being made, scoring more shares of Johnson & Johnson last quarter. We see over 1.4 million shares purchased. Now, on top of jumping in with the hedge funds, you personally wouldn't be on standby for those profits with J&J, because all along the way, you're going to get to reap the benefit of a dividend coming in at a 3.22% yield. And get this, that's been an ongoing streak now for the last 108 years, all while remaining incredibly safe according to Simply Safe Dividend, scoring a 99 and just continuing to grow by an average of 8% year over year for the last 20 years. Now, investors, there you have all three dividend steals. Let me know your thoughts on these dividend stocks, if you own them, if you think they're buys right now, or if you have better opportunities in mind for our entire community. Definitely be sure to go ahead and comment down below. Catch more insights right here, but before you click away, actually make sure you're subscribed to the channel so you never miss another dividend stock idea.